So today we're going to look at bearish markets, trend channels and wedges within the market. So recently I had a friend who asked, why do we get excited about markets that are crashing? Well, not crashing in the sense of we know they're going down and not coming up back up again, just a normal bearish market. It does leave a lot of opportunities for buy and sell, and we're going to look at this now. Firstly, bear market is a financial market that experiences a prolonged price decline of generally 20% or more. Okay, and a bear market usually occurs with one with widespread investors pessimism, long-scale liquidation of securities and other assets, and a weakening economy. Okay, so this just means for us who know the value of having cash at hand in our trading accounts, that this does leave the opportunity for us for good buy opportunities. Okay, so let's look at this. So the big question is to buy or not to buy. This is not as easy as just yes or no. So let's look at this simple. Look at MTN. So this slideshow was made on the 8th of August, and we're going to look at, ignore this line there, it was actually, we did it there. Okay, so it's on the 8th of August. So we looked at creating you can beautifully see the bear market going there. It's declining nicely. And then I've created a wedge. So wedge, all preference, please remember, all trend lines, all technical analysis, it's really where you want to start. I was taught, and I enjoy doing it this way, where I make it any channel, whether it's horizontal or like a slant at this, I go top channel at a green wick and bottom at also a green wick. But if you start at a red, then the bottom can also be a red, as long as there's consistency. Okay, so the general rule of this that I would say is that if you do put your middle line in there, you can nicely see that my data is evenly spread above my middle line. Okay, so this is clearly a bear market for MTN. So the wedges create congested pricing. Okay, so we go at the top. You can find there again discretion. You can find at least 2 to 3 wicks that. I said wicks earlier. It was candles now. So you can find 2 or 3 wicks. You draw it out. Then you find a bottom wick that creates, as you can see, this beautiful wedge there. So the theory says that if we make this wedge, it would bounce in between this wedge, hit it and go down, and then burst out. Yeah. When it bursts out at the bottom, it's most likely to start declining, and then we're in trouble, or really, really good buy opportunities. If it breaks out here, it's definitely turning to a bull market. Okay, my purple lines are just congested price lines where I feel that this would be a really good selling point. As you can see there, people congested and it dropped. There was a really nice congestion, either big buys or big sells. Yeah, and so at the bottom I've got my stochastic. Your blue line follows a weekly one candle, and the red line will follow, as you can see there, will follow 5 weeks congestion. The 50 years, the percentile. And general trend, just looking at stochastics, if they break through in the same direction, as you can see, they work nicely. The red one just takes a little bit longer. Okay, so if we look at, so this is now where we go and look at why do I personally enjoy trading in a bear market. Well, as soon as it hits there, it doesn't matter where you've climbed in. If it hits the top, it's always a nice sell up some of your shares as to so APP or average purchase price, as to see to get, just get some cash in hand and reward yourself. As you can see, it's a top line, beautiful time for you to start selling a bit of your shares. The plus side of this is as soon as it starts dropping, now you can see the correlation there. That drop correlates with this one, yeah. As soon as this starts dropping there, this gives you a really good opportunity to start buying. Now, since I've started using a stochastic, I do not start my buying above the 50 percentile. As soon as it's 50 percentile, I start doing APP. That's averaging down your average purchase price. Start dragging that down, and then you can see beautiful turn again. Again, I only start selling when it starts hitting past the 50 percentile on my stochastic, and there you can see again beautiful up there. And this is still within a bear market. So this created an opportunity for you to sell. If you've bought somewhere here, beautiful opportunity to sell some of your shares, or all, depends. Beautiful opportunity to buy in again, beautiful opportunity to sell out again. Okay, and then the last one, if we look at a wedge, as I said earlier, wedges is a formation where it just shows you some pressure points. Okay, so it usually starts like a ping pong ball, starts bouncing in here, starts breaking out. So let's go and look at what the share is doing today. There you can see, let's just take, there you can see today, there's the line let's just get to that point. It was on this one that we drew the graphs for the presentation, and here you can see beautifully, there we can see the wedge goes up into the wedge, and there's our breakaway. Can you see it hit that price there? As you can see, congestion this week. This candle was formulated after I drew this purple line. It's just statistics, people. I'm not a wizard. And then, so you can now either wait for this for next sell, or personally buying now is too late. It's already passed through that wedge, and I think the people who has started trading this and scale down on their cost price, you are going to have an amazing selling out on MTN. So the personal opinion, love bear markets, great opportunities to buy. As you can see there, great opportunities to sell out, beautiful to buy in again, sell out, buy in, and we go back to a selling price. As you can see, stochastic, there they've crossed both in the same direction, and this just shows me there's still plenty of opportunity for this share to rise again. Thank you very much. Hit the like, hit the share button, and see you next time.